Million Strategy Roundtable for entrepreneurs. And probably most of you know by now that this is part of the 1 Million by 1 Million initiative that we have started with the 1 million entrepreneurs reach $1 million in annual revenue around the world. And we consistently get people around the world joining these sessions, and it's really exciting to see all of you doing exciting things, interesting projects, and I really have a blast working with you all. And typically the audience have always come back with very positive feedback and interactions as well. So on that topic, you do have a group chat. For those of you who are in the audience, you have a group chat at the bottom left corner of your screen, of the VView screen. And feel free to use that to discuss the presentations and so on and so forth during the call. And typically we see very active discussions in there. So feel free to use that as much as you want. My group chat, however, will be closed. So do not send me private chats in the middle of presentations because it's very distracting. It's very distracting to, it takes a lot of focus and attention to be able to listen to every entrepreneur and give them meaningful, meaty feedback in real time. So if you interrupt me with private chats, asking questions constantly, it is impossible for me to keep doing that. However, I will open up my private chat, public chat at the end of the session. I'll give you a cue for that, and then you can start asking me questions, and I'll try to take as many of them as we can. Now, before we go on to the presentations, I want to share with you a very exciting news that we put on our blog today and also on the wire as a press release. 1 Million by 1 Million has announced, we have announced a partnership with a company called Persistent Systems. It's one of the largest outsourced product development and software development services firm that is over $100 million a year in revenue. And the company has an extensive channel presence in North America and Europe. And what we are doing is, with Persistent, is taking some of our 1 Million by 1 Million entrepreneurs and partnering with Persistent to help to leverage Persistent's channel for our entrepreneurs to go to market. So the first company that is part of this deal, is the first beneficiary of this deal, is Crowd Engineering. Crowd Engineering is based out of Pisa, Italy, and they presented at this roundtable about 6-8 months ago. I can't remember exactly when, but sometime last year. And over the last few months, we've developed this relationship. We've been working together, and now Persistent is going to take Crowd Engineering to market in North America. So it's very exciting opportunity. You will read a lot more details about the the rationale behind this deal on my blog. So feel free to go to the blog. It's the top article on the blog today. And just to give you a little bit of a flavor on what my thinking is about deals like this is that as small companies, as startups, it is very expensive to build channels. So when you're in the early stages of building your reference customers, the first 6, 12, 15, 20 reference customers are very difficult to build. And if my thesis is, if you can build that using somebody else's channel without having to invest in your channel right away, it creates a lot of validation, a lot of valuation. And in general, it's a better way of building companies. Now, this is not easy to do at all. Accessing other people's channels is excruciatingly difficult, which is why I am putting in the investment through 1 Million by 1 Million to build some of these partnerships, and then we will introduce you and we will negotiate some of these partnerships for you so that you can leverage these partnerships. It's a very, very serious, very, very important piece of our strategy. And you'll see as we go along, as we develop 1 Million by 1 Million, this is going to be a cornerstone value proposition for our entrepreneurs. So with that, I'm going to move on to the actual presentations today. If you are using Twitter, if you're twittering today's show, which you're very welcome to do, we have a lot of people twittering the live show, use the hashtag 1M1M as your anchor. And Bharati, if you don't mind, would you please start recording the call? All right. So the first presenter today is Ryan O'Donnell. Let's Gift It is the company. Ryan, please come online and unmute yourself and tell us what you've got.
Very good. Hi, Sramana. Congratulations on the new partnership, and thank you for giving us the opportunity to present here today. So my name is Ryan O'Donnell. I'm the co-founder and CEO of Let's Gift It. Most recently, I was with Yahoo for 3 years as Director of International for a business unit bringing disruptive monetization technology to non-US markets. If we could go to the next slide, please.
Are you based in the Bay Area?
We are based in New York.
You're based in New York, okay.
Very good. So back in July, a Facebook friend of mine was getting married, and I, along with 440 other common friends, were not invited to the wedding. I wanted to do something nice for the couple, but didn't feel obligated to give a socially acceptable amount of $50 or $100 or $200. And I also didn't want to be perceived as being cheap by sending a $5 Starbucks gift card, for example. So we created a web and Facebook application, and Let's Gift It was born as an easy, fun, and social way for friends, family, and coworkers to contribute towards the purchase of a gift for someone special. So organizing an offline group gift is complicated, time-consuming, and creates communication loops that makes it unpleasant for both organizers and contributors.
Okay.
Next slide. Next slide, please. So the main reason why people buy gifts is to enforce a connection and strengthen a relationship. It's a socially and economically driven action. Our target market demographics highlight two profiles of gift givers. The first of these folks are typically those who organize offline group gifts, and Let's Gift It is positioned to make the process easier on this demographic. The second demographic which we target are social gifters. This is the younger demographic of predominantly women who are active on social networks and like to do nice things for their friends. This group likes to pay it forward. So gift givers can be classified into 4 different personas described in more detail on this slide. And gift giving is an emotional act connecting gift givers and gift recipients to enhance emotional experience with one another. Next slide, please. So we drive our customers to our technology via 3 different acquisition channels. The first of these is direct traffic through our Facebook and web application. The second is through partnering with third-party sites, organizations, or businesses whose customers are predefined into groups. And the third method is via a group gift widget, where retailers or service providers can embed a very simple piece of JavaScript on their site, which is targeted to customers who are shopping for themselves or for someone else and don't want to pay the full amount for a product or service. Next slide, please. So in summary, we've conducted our customer research and validation by reaching out and having direct conversations with some of our very early customers who've been using the system. Feedback so far has been positive. Folks have been saying, this was easy, my friend loved the gift. Some of our retailers have said, hey, sales are up. And you know, we face some challenges common to a lot of new businesses, and we have some questions like, you know, how do we earn the trust of our potential clients to use the system before we have, you know, much larger traffic? How do we more effectively acquire more customers? How do we go out and start or seed gifts for folks without violating their privacy? And how do we creatively market to avoid the, you know, I wish I knew about Let's Gift It before I organized my last group gift? So at this point, that could.
Sorry, Ryan. What is your business model?
So our revenue model or the business model?
Well, how do you make money? What is the monetization model?
Got you. So we charge when a group gift is set up. So an organizer comes in, starts a group, invites their friends. We charge on a transactional basis. So we charge 75 cents per contribution to the group gift pool. We charge a 4% management fee of the total amount of the gift. And then we earn affiliate revenues through our partners through which we're procuring the gift.
So your assumption is you are the destination site. Is that correct?
Yes, for people who typically organize these group gifts for our first demographic, we are the technology that allows that solves their problems of doing it offline.
No, but answer my question, Ryan. Answer my question. Are you the destination site, or is your product is your application something that's sitting on other retailers' sites? Because the moment you say you are making money with affiliate revenues, you are assuming that you are going to be the destination site, and you are then going to have the responsibility of building the traffic. But in truth, the traffic is not on your side. The traffic is on retailer sites. So I think this business will flow a lot better if you have an application that's sitting on other people's site and you take a percentage of the transaction.
Right. So yes, and we are in both markets. So we're a destination site, and then as we grow the business and start to build out partnerships, the goal is to be integrated into other registry sites, retailers, and service providers' websites, driving them back to our group gifting funnel, which allows for the organization and facilitation of the actual group gift.
I'm actually I'm not of the opinion that you should be doing a destination site, because it's very expensive to build destination sites. I think since you have a product that can sit on other retailers' sites and can be an integral part of their selling, you're showing them, and you basically enabling or empowering a new revenue stream for these kinds of retailers. Normally, people who do wedding registries don't have this kind of pooled gift giving mechanism. So your first place to go would be these people who have wedding registries, and just become an extension of their service and do deals with the wedding registry players.
Okay, and how would you recommend that we approach those conversations and striking those partnerships?
You're going to have to do all the regular things about direct enterprise selling, because what you're now doing is an enterprise product, and you're going to have to go sell to these enterprise customers. Now, if you decide to join 1 million by 1 million, I can try to help you through the channels that we have. But in general, what you're putting yourself in that sense, what you're putting yourself is in a B2B sales and marketing situation. B2B sales and marketing is a lot cheaper than B2C, especially in the kind of business that you're going into. I think it's going to take time to build a B2C destination site where people naturally don't come to these places to do the gifting. But if you're talking about a wedding registry site, there's a very natural foot traffic to the sites of Macy's and Crate and Barrel and whoever is doing wedding registry. So if you just add this service onto their offering, there's a very easy extension. And what sounds like it's a good value proposition, it's an interesting value proposition, it's a new way for them to expand their revenue model. So I think they would be very receptive. I like the idea, but I think your go-to-market strategy needs to be a B2B go-to-market strategy, not so much a B2C go-to-market strategy, at least not at this point. Over time, once you've got this thing, penetrated into the wedding registry market, which should be your first penetration segment, you could open up other segments. You could do even B2C, but to begin with, at least for the next 18, 24 months, I would go straight to a B2B model and sell to the wedding registry players. Okay?
Okay, very good. Thank you for the feedback.
You're very welcome. All right, next is Jeff. Jeff, can you please unmute yourself and come on the line?
Hi, sorry about that. I had my microphone on mute. I'm Jeff Bogensberger. I'm CEO of Soko Games. We're based in Melbourne, although the staff of Soko Games is all over the world. So to give you an idea of what Soko Games does, we basically we do one thing: we build Facebook games. Our inaugural game, Earth 2.0, was launched on Facebook about 3 months ago, early October, and we're moving along. If you could change the slides, please. The value proposition that we bring to the table is kind of 3 tiers. Social network games in general, the main concept behind them is to provide people with an average of 15 minutes of an escape. You need to be diverse but not complicated. We're not competing against people like PlayStation and Nintendo, where the games are really high intensity. It's a different community that we're targeting.
But you are competing against the Farmville and the Cityville type of games, though, right?
Yeah, that's exactly who our competitors are. That's the genre we're in. Farmville's, well, they were the biggest up until about a month ago. The same company, Zynga, just launched another one called Cityville, it's just exploded in about 6 weeks. And the rest of the kind of the value proposition in social network games, just in general, is the community aspect. Now, we drill that down a little further. What does Earth 2.0? As far as all games on Facebook, we're in the top tier. We would rank up with Farmville and Mafia Wars as far as quality. It's an error-free game, which is not that common. There's a lot of developers who are just pretty Mickey Mouse, and Earth 2.0 is really well designed, and we have a really engaging storyline that's being received really well. And now, over and above that, a value add that we're trying to do to social games in general is we're creating a really vibrant community. Our discussion board is exploding with comments. There's discussions on all sorts of things with regard to gaming. There's debates on who's the best musician of all time, what's the best song. So we're really trying to build on that community aspect over and above just talking about the game. We apply traditional customer service type ideas to the game. We're very diligent in answering questions, providing feedback, listening to what the players are saying as far as what upgrades they want. What's become very interesting to me is how many players now refer when they're communicating with us as if in the first person, as if they own the game. Like, we need to do this, we need to add this, we really like this, as if they somehow own the game, which is a great attitude. And finally, a value add that we're doing is we've integrated what we call the Soko Games Players Fund. We take a percentage off of top line revenue, and we have from day one. It goes into this fund that supports 32 different charities around the world. It's something that the players can get behind. We never ask for donations. We never sell anything special. So it's a really honest, upfront way that players can feel good about just playing a game for 15 minutes, and they know that in the end somehow they're helping out various organizations. If you can change the slide for me, please.
I have a question before we do that. What is the storyline of the game? If you could just give us an idea about the storyline, that would be helpful, I think, for everybody.
Okay, sorry. Earth 2.0, what we did, because we always knew that we wanted to integrate this Soko Games Players Fund, and we started talking about a story, and we wanted something that was sci-fi, kind of a mix of Star Trek, James Bond, and a little bit of Dungeons and Dragons and Lord of the Rings thrown in.
Mm-hmm.
The storyline is basically, in today, the decision is made that we've gone too far and we've destroyed Earth number 1, and so the plan is put in motion to colonize Earth 2.0, and your character's job is 300 years in the future. You're to lead 10 billion people to our new Earth and colonize it. So that's the storyline, and it kind of fits in with the Soko Games Players Fund, because we kind of it was kind of a laugh where we went, you know, it isn't inconceivable that we could screw up this Earth to the point where we can't live here anymore if we don't do anything about it. And so we decided, well, that's the storyline, and we'll promote the Soko Games Players Fund as a way that we're at least doing our little part, and all of our players are doing our part, so that we don't destroy Earth number 1, so we can stay here for a little while longer.
Okay.
Customer definition, this is how we approach the market. These are in order of priority. First of all, we target Facebook users. About 8 months ago, it rolled over past 500 million people. So we target Facebook in general, Facebook players, people who are on Facebook. Hopefully they can find our game. Secondly, if you're on Facebook and you're playing a game, which is 80% of people do play some sort of game. The majority play, if you're playing one, you're probably playing 6 to 8. So, you know, you're looking at an arc of about 400 million people plus, growing every day. We then target games that are playing our genre. The Farmville genre isn't really us, although the basic business model is the same. But we have a type of game that's more in line with games like World at War, Mob Wars, Mafia Wars. Those are more of a role-playing games, and that's Earth 2.0 falls closer into that genre. Mm-hmm. Once we drill that down, we target high-valued demographics. There are a lot of players in geographically in countries that typically don't have credit cards, and because of our limited marketing budget, we've decided to target North America, original EU countries, mm-hmm. Middle East, Australia, New Zealand, places where people are a little bit more affluent, so more first world countries. Yep. Although that's who we target, we still have, there's a huge amount of players in Southeast Asia and India as well. They just don't monetize as well. So we don't target them, but just the viral nature of Facebook, we have tons of players there as well. We then drill it down a little bit more because of the theme of our game. We try to target people who are mild fans of science fiction, space travel, future fantasy, etc. We're not talking about the hardcore Trekkies because our game isn't sophisticated enough to meet their requirements. It's more a little like it's like I'm probably the perfect example. I find those things interesting, but I'm not fanatical about it. Mm-hmm. We then look at also people who are kind of the pseudo-intellectual, as I like to call it, level of entertainment, things like CSI, NCIS, Mythbusters, Star Trek. We're not talking about the hardcore science stories on Discovery Channel. It's more the people who are just don't want to be insulted by their entertainment, but they're not so fanatical that you have to reach a level of accuracy that we just don't reach. And then finally, through the Soko Games Players Fund, we target people who are get behind grassroots initiatives that like to be a part of something and feel good about what they're doing. Our acquisition strategy, we started out trying a number of different things, but nothing has proven to be as cost effective as placing our ads on other websites, applications, offer walls. Now, for those who don't know this industry at all the games work the same, that there's a virtual currency that allows you to enhance your player experience. Those currencies are acquired through playing the games at a certain pace, but if you want to speed that up, you can buy that virtual currency using real money, or you can complete offers like fill out a survey, download a coupon, sign up for a credit card. It's getting quite sophisticated as more and more companies realize this is a really effective way to market. What happens then, once somebody completes that survey, in our game, we receive a percentage of the revenue that was agreed upon with the advertising company. Now, we also do that. We advertise on other applications and websites and whatnot, and if you download our game and you play it until you have completed the tutorial, then we pay for that. Now, what happens is, why we found it a very effective ROI is that a player has to actually play our game for 15 minutes before we ever pay for that as far as marketing goes. This results in, one, a player that's already engaged in our game, so they have to go through a bit of a weeding out process before there's ever somebody that we have to pay for. Plus, every month we get literally 500,000 free impressions per month, where people who are online people see our name at least 500,000 times. And as far as a marketing ROI, we're seeing an ROI in 1.5 months conservatively, probably because we also, in order for us to pay for that person, they have to invite 3 of their friends. So every person that we pay for, we pay for 4 people. So that ROI for that one person also gets extended to those other 3 people should one of them start playing, and once you get to the 2nd and 3rd degree, we're probably seeing an ROI in under a month. And I come from the marketing world. I've never seen just the concept of you don't pay for your marketing until your customer has already bought your product that's incredible.
So how many paying customers right now?
How many paying customers? It would be about 2,000. Now, in this world, we're actually doing really well, because in this world you typically only see paying customers are only about 1 to 3%. If you have anywhere over 1%, you're doing well, and 3% would be the best in the industry. Someone like Farmville would have maybe 3%. So we're actually doing quite well, because we're probably at about we're at about 10%, but we're a little bit skewed because we're still young. We haven't got the millions of players yet. So
you have about 20,000
yeah,
players, 2,000 paying?
Yeah, probably about that, something like that. And it changes and grows every day. We've just implemented an off-the-shelf solution that allows us to track our players a little bit better. Just resources were that our back-end tracking, very important to our business, but we just didn't have the resources to build it properly and get it implemented. So now we've got something, so we'll have a better understanding of our numbers. But that's roughly where we're at, give or take 10%.
For the premium version, what do you charge?
No, the business model is such that it's always free to play. What's that? Sorry?
Virtual goods, right?
Sorry, I missed you there.
I said virtual goods. You're charging for virtual goods?
Excuse me. Yeah, that's right. The business model is you never charge for the actual play. You need that volume of players, and yeah, it's virtual goods, virtual just enhancements to your character, like, you know, increase your energy by 20% for 24 hours. We sell something like that, or increase your battle strength for the next 6 hours, and it's all little microtransactions. The idea is that you want to get an average of $1 per player per month. That's the goal this industry strives for.
So you're at around rate about $2,000 per month right now.
Yeah, we're actually doing well there as well. We're probably about $2,500. The overall strategy that we're taking is one of patience. The idea is grow the player base first, and then worry about monetization. That's typically the successful games go that route. So all of our resources right now are going to enhancing the player base. So we want to get to.
How do you sustain in the meantime?
What's that, sorry?
How do you sustain in the meantime?
Well, the thing that we've done really smart is we have no expenditures. Like our monthly expenditures are $1,300, and we can get to probably $50,000 monthly revenue before we need to increase that number. So this business model is a very, very attractive one as for someone with minimal initial startup capital, because really all you have to pay for is we pay for our hosting, that costs us $800 a month, and then our marketing is $700-800 a month, and with that expenditure, we're getting about 500 new players a day. Yeah. So it's the scalability is there, because the only cost that goes up with increased players is the hosting, and for $800 a month, we can handle 50,000 daily users, no problem. So that's probably in the 150 to 200,000 monthly active users, and we got a long way to go. And if we have that many, that our revenue will be 50,000-60,000 a month.
Yeah, I don't think hosting or infrastructure charges is the issue here. The real issue is customer acquisition, and I see that your questions are around that as well, right?
Yeah, like all my questions are because we found an effective way to spend our money. Now we're just looking for all the free ways that we can do it. We found this Help a Reporter Out has been great. I was actually through that site. I just in our Social Games Players Fund, I was on with Mahatma Gandhi's grandson talking about how to change the world on a radio station. I couldn't believe that. That was a pretty cool experience. I'm being quoted twice in the new guerrilla marketing book that's going out. In 3 months, I'm probably mentioned in at least 50 different articles. Been on in a couple of major newspapers here in Australia. So just we're looking at any way that we can get our name out for free. Because I don't see any other marketing form that even Facebook ads make no sense to me anymore because of the ROI that we get from just it's such a targeted way to do things.
Well, there's one thing that I would say though is, for what you're talking about is fine. It's a little bit non-segmented and non-targeted. The stuff that you talked about in-game advertising, the offer within the game, that is very targeted, and as you described yourself, it's paying off very well. But I think you need to kind of focus on a bit more targeted on the kind of places that you seek to get PR from and you seek to get publicity in. So, for instance, when you're talking to us here, this is not necessarily a place to recruit gamers from, right? This is a group of people who are entrepreneurs and aspiring entrepreneurs. They probably don't have a lot of time to play games, so it's probably not going to give you a lot of customers. However, there are a huge number of blogs that are dedicated to games. And those are the places where you want your game reviewed, you want visibility basically, because that's where the kind of people that you're trying to reach out to hang out. The other thought I have is, in Google, you could use the display advertising. It's still pay for performance advertising, but display advertising in Google that gives you access to Google right now, I think, has access to about 2 billion websites or something like that. And if you use keyword targeting to advertise against some of the types of games and the types of communities that you're trying to reach, that is actually extremely cost effective.
Yeah, we have tried that. The difficulty we find, or with our limited budget, when you use anything outside of Facebook, the extra step of getting someone to go from a Google search to Facebook, then to the game, we found that it wasn't very effective. Not as effective as somebody clicking and automatically being taken to the game, and then having to play for at least 15 minutes before we actually have to pay for that person.
Well, no question.
We have tried.
So it's obviously you're going to get a lot more traction in Facebook. There's no question about it. But you're asking questions about PR, right? So my answer to the PR question is twofold. One is a PR is not going to happen on Facebook. That is going to happen on other people's sites, other blogs, other media sites. So you will have, but if you do targeted PR on places where gamers are hanging out, that is going to be a way to gain visibility. That's how PR works. And I was basically extending that line of thought and saying that you could explore Google display advertising. It goes through the same AdWords, infrastructure, but if you, instead of doing so much focusing on the search network, if you focus on the display network, it's a lot less expensive, and you could reach those same kinds of blogs that I'm talking about, the game where gamers hang out, through Google's network as well. That's my point. So it's a subtle
Right.
point.
Okay.
I'm going to have to move on to the next presenter, but this recording is going to be available online. Play it back and try to catch the subtlety of what I just said.
Yeah, well, yeah, thank you. I appreciate it. Yeah, the one question I did have, do you have any thoughts on the newswires free versus pay? When I talk to PR people, they say, oh yeah, there's lots of value. When I talk to other entrepreneurs, they say there's no value in paying for it because all the free newswires work just as well.
There's not a lot of value in paid newswire, but the bigger point is what you're trying to sell is not a news-oriented product. So I think part of what you need to do is not gonna. It's not so much news. You need reviews. You need product reviews in the gaming community.
Okay, thanks.
Okay. Yeah. All right.
Yes, I appreciate it.
Andrew, are you there? Thank you, Jeff.
I am here. Can you hear me?
Yes, I can hear you. It's your turn. And if
great.
the rest of the presenters could put yourself on mute, that'll be great. So that you can listen to Andrew's pitch. Go ahead, Andrew.
Great. That's a funny picture of me that you got up there, probably from Facebook or something.
Where are you located?
Do I have like a? I'm in New York right now. I'm in front of a computer that has a webcam, but I have no idea if you guys could actually see me or
no, don't worry about it.
The story is there.
Okay. For the moment, just keep going with the slides and your voice.
Okay, great. Well, sorry for joining late, and I was under the impression that it was a 3-minute pitch, so I did submit the very short one that I have.
That's perfect. That's a chance
go ahead and Great. So Brainscape is a learning platform that optimizes the efficiency in which we could study just about anything. So you could think of Brainscape as personalized knowledge streams that you can subscribe to, and they work somewhat like a flashcard. So you see here kind of a screenshot of what the portal looks like, and it's somewhat like an iTunes in which you can join for free, and you could subscribe to different knowledge streams of flashcards, whether they're for free or whether they're $1 like something like National Capitals, or even up through, say, $100 if it's a professional educated publisher's, say, MCAT prep content, medical school prep content or law school prep content. And you can also create your own flashcards like you would for regular classroom and have it all in one place, all accessible via web or mobile phone. And what makes Brainscape unique isn't just that it's a manager of all this content, but that it feeds you information in a way that is proven by decades of brain science to help you learn faster, and that no one has really implemented very, very effectively. And what I mean by that is, and I don't have a screenshot of the individual card because I only gave the 4-slide version here, but think of it as you see a flashcard, you see, say, a Spanish word, for meatball, it's albóndiga, and it asks you on a scale of 1 to 5, how well did you know this? Where 1 means I didn't know this at all, and 5 means I knew it really well. So if it's a word that I don't know very well at all, I would give it a 1, and it would show it to me again very frequently until next time I see it, I gradually give it higher levels of confidence. So when you've got thousands upon thousands of medical terms or cocktail recipes or Supreme Court cases or anything else that you're trying to study, this becomes an extremely efficient way to manage it. And we've done many studies showing that it increases learning potential by at least 2 to 3 times or even more, depending on how much you're studying. And this is something that in our existing user base, which is now almost 100,000 users, users are very, very highly appreciating, and it's something that they're willing to pay for. You see here on the addressable market slide, even just the immediately addressable market in the United States is over half the country learning something formally or informally right now. About a quarter of all the money that's spent on retail e-learning is spent on study tools, the knowing of facts that kind of complements the online skill-based assessment and video and games and things like that. And then as we expand, beyond the retail market and offer more and more content in those categories that you see there to the left, there's future opportunities for licensing the technology, both to schools, to universities, to companies. Think Pfizer.brainscape.com for training sales representatives, or even as it gets bigger, what we call the Learning Genome Project. Mapping all the world of everything knowable by working with the top education experts and top universities here to outline the content and then basically open it up sort of as a flashcard wiki, so that anybody can create and improve on other people's information, so that you've got everything knowable in the world broken down in its fundamental building blocks and able to be delivered to you more effectively and efficiently than ever before. So you can think of it as kind of the Twitter for learning. How do we tell the world about this? Well, if you go to the next slide, there's 4 synergistic marketing activities that all kind of work together. The first is just the fact that it's an inherently social product. We've already got almost 100,000 users without doing any marketing. It's people basically loving the product and like copying a link and putting it manually into an email for their friends. We don't even have like Facebook and Twitter or whatever hooked up. But as everything kind of gets more hooked together, you've got people that might be creating their own content. If I'm in a biology class and I create a deck of flashcards and I create a study group of 5 friends who are all going to create their own stuff, I just quintupled the user base right there by inviting my friends. Second, we put out free promotional apps for just like quick little crash courses of stuff that people wish they knew, whether it's like survival Spanish, for free as an upsell, or like the Super Bowl crash course, with the Super Bowl coming up here in America. People, what are the 100 things you should know about this game before you go, or political apps, how to talk to a liberal and how to talk to a conservative, things that generate lots of interest in PR and people share with each other and they go viral, that as soon as people go into that app, they're exposed to all the rest of what we have and all the rest of our content that they could pay for. And then the third is engaging content partners. Originally in the first couple years that we're doing this, before we opened up the Learning Genome Project and kind of the open flashcard wiki that I mentioned, all of our content comes through professional educators. So if you're the Princeton Review, which is the second biggest test prep company here in America, and you've got a medical school app that you're selling through Brainscape and earning 50% of their revenue, you have the same incentive that we have to market it. If you're a political commentator that has an app, a knowledge stream that people would get through Brainscape, you also have the same incentive to promote it on your own because it's through the Brainscape marketplace. And the fourth strategy is thought leadership, and it's my personal favorite with my own academic background in e-learning and learning sciences, and that's kind of taking learning science and making it fun and sexy. The articles like, why do you speak a foreign language better when you're drunk, or Ritalin versus caffeine as a study aid, the kinds of things that they're interested in, they read, they share with each other, and then when people land on that blog post, suddenly now they're in the Brainscape sandbox. They're like, what is this company Brainscape? And everything kind of starts feeding together a lot. And because of these new and different things that we're doing, we already are getting a lot of interest from journalists, which we're sort of putting off right now because we've been overhauling our website, which currently is crappy, and are about to relaunch a new one. So we'll be launching a lot of these marketing activities and having them come together, which will really kick things off. And if you go to the next slide, it kind of shows what happened.
Before we do that, I'm going to ask you a question.
Oh, sure,
What
sure.
is, when you say engage content partners, you gave the example of Princeton Review selling through you. My instinct is that I would do the reverse. I would kind of build content in partnership with Princeton Review and then let them sell because they have the brand and they have the channel. What is the advantage of getting Princeton Review to sell on your site instead of vice versa?
Brainscape's a platform. So it's not something that we could just easily be like, okay, take our platform and put it on your site. It's not just like individual apps that they would have and they would just like put a link to on their site. it's an entire content ecosystem. So there's a future possibility in which, we have an open API so that, other sites can integrate kind of like the Brainscape flashcard widget into an existing e-learning package that they have. But the main plan is getting, they still are able to have it on their site and offer it as a standalone product if they want to, and they send a link to it. But the benefit for them is that they're benefiting from our very fast-growing user base. They're benefiting from being able to say, we're partnering with a company that is very serious about the learning sciences and helping people learn more efficiently, learning mobile in the way that people do, in this day and age, in this generation, and which their big company bureaucracies really have been behind in innovation. So I think it is a big value proposition for them to be marketing through Brainscape.
And where did you get the customers that you've got, the 100,000 customers? What is the seed? How did you seed that customer base?
That's a perfect question and a lead-in into this slide, actually. We put out a pilot app, GRE Vocabulary Genius is what it was called, GRE Vocab Genius, because before we did any marketing, we wanted to get maybe a few dozen, a few hundred pieces of user feedback, and improve the product and iterate before we got too big. Well, what happened when we put that out? If you advance the animation here, if you reveal the next, yeah, there you go. What happened when we put it out was, well, oops, we rose to #1 education app in the first week on iTunes out of 14,000 education apps without meaning to, without trying. Users just kept getting it. They were telling their friends. App reviewers online were picking it up. And within less than a month, we had 40,000 regular users. Now, like I said, we're pushing 100,000, and we haven't done any marketing. So this is what happened with one app. And as we've put out other ones for languages, for things, we have a bartender crash course app, a blackjack odds trainer, and a few others that we've put out there. We're getting more and more eyeballs just from having something on there and people typing in a keyword and discovering it.
But so you're putting out random apps. Bartender has nothing to do with GRE. This needs to be segmented. It's all over the place. Why are you putting unrelated, uncorrelated apps out like this?
Well, a few reasons, actually. So we have a whole spreadsheet of types of content that fit the Brainscape model really well. Something like accounting might not, because you need to be doing problem sets. You need huge spreadsheets. It's not really perfect for flashcards. But things where you would need to memorize things. Bartender is a type of it. Vocabulary is a type of it, and they're very disparate. So we thought to ourselves, where do we focus? Where's the biggest market? Where's the biggest growth? A, we didn't know, which is a short answer, and we wanted to kind of plant a few different seeds. B, we had a few unpaid interns working with us for an entire summer, and we're giving them things to do. They're not, we didn't have yet partnerships with like the big education publishers, so they're not going to do law school content or medical school content. So we said, what's a bunch of easy stuff that they can do? And so we have breadth. And 3, there's advantage to having different content because somebody, for example, driver's ed, maybe somebody's a junior in high school and they're looking for something like driver's ed, and that's what they need today. But once they get in there and they're in the app and we're able to send them messages saying, hey, you're taking a driver's test, well, you might also be taking the SAT soon, and if you like learning this way, in the most efficient, fast way that you can learn, we also have stuff that you can do to prepare for your SAT exam, which is what Americans take to get into college. So the more different tentacles we have, the more cross-selling and upsell and synergistic opportunities that we have, and
so
to get covered by various different media.
Are these free applications?
Some of them are and some of them are not, and a lot of them that are free are sort of a light version. So like Survival Spanish, it's free. It's, what are the 200 things that you need to know how to say before you go to a country? And then, if you like the app and you want to get more than just 200 phrases, then you would upgrade to the 5,000 phrase version, and it's got audio and everything like that, and that one would cost like $8. And they're
do you
among
have a product like
expensive.
that? Do you have a product like that out right now?
Yeah, we have a few, and the conversion is actually very good compared to other benchmarks that are on iTunes.
So what, can you give me some benchmark of, like, let's say if you have a Survival Spanish free versus premium kind of model, how many users do you have? What's the conversion rate?
Conversion's been about 5%, which is really good. Average is often 2 to 3%. And we don't yet have an ad model, which we're considering because we do have.
What is the top line? What are you converting off of? How many free users do you have on the Survival Spanish, for instance?
We're not right now prepared to release individual numbers for every app that's out there, but except for the one that you see here on the screen for the very first app. But suffice it to say right now that the conversion has been good. The experimentation with prices has helped us to nail down on the optimal one for revenue maximization, and we're not quite profitable, which is why we're sort of in the round talking to some investors so that we can scale to get there, but things are certainly picking up.
Okay, let's go to your questions.
Sure. So, the first question, and I'm not sure, your background's not kind of as an investor, but if you're looking at a company that's high growth tech company, are you more interested in a company that has a lot of user traction, or many fewer users but more revenue? Because there's decisions that we are often making and what apps to put out there. That maybe we can get 500,000 free users, or maybe we can get 10,000 users paying $5 a pop, and that's way fewer eyeballs, but we've got revenue coming in. So what would you be more interested in?
Investors are interested in are validation points. So they're interested in understanding what is going to be the monetization model, what is going to be the conversion rate, what is going to be the customer acquisition strategy. So it sounds like your customer acquisition strategy is through iTunes, and you have some validation on that particular channel. So, so the questions that I was asking you about numbers, actual numbers, are what investors are going to be interested in figuring out, is like, how many free users can you attract through the iTunes channel? What is the conversion rate of that? And is that scalable? Is that, does that amount to a large enough TAM? Those are the kinds of things that they're interested in. So if you go to them with a very large number of free users without any of those other pieces validated, especially a conversion rate and a business model and monetization model, that's not a good thing. But if you go to them with a reasonable with a small or reasonable number of users, and you can demonstrate the full prototype of how you're going to build this business. What is the customer acquisition strategy? What is the what is the free customer acquisition strategy, and what kind of conversion rate can you achieve? That pretty much is what investors look for in these kinds of deals. Okay,
good to know. So focusing more on the ratios than on just sheer volume of free users.
That's right.
And that also helps us kind of keep targeted acquisition activities. You mentioned that an acquisition activity, the main one, has been iTunes, and that has been what it's been so far, sort of without much active effort on our part other than putting the apps out there and making sure we have the right keywords. But as the new website comes out, by far our most active acquisition strategy is through the web, because users can study through the web, they can create content through the web, they could share through the web, they could share very easily on Facebook, Twitter, they read in our blog, all the different tentacles that we have out there.
Maybe, but what I'm saying, listen to what I'm saying. I'm saying you need validated strategies. Mm-hmm. So just a hypothesis that this is how we're going to do it is going to be less convincing than validated strategy, which is why the iTunes one is interesting, that you have some actual validation on it. That's why I was probing on the specific numbers on that one. And I think investors will do this.
We also do on the web, where we have every week we have more. Right now, even with our crappy website that I'm even embarrassed to show people, we have more users every week than the previous week. We are growing exponentially. But the more we can kind of put those figures together, both from our own website and through Google Analytics and conversions that we have out there, that's certainly to our benefit. So thank you for helping us.
I need to get to the next presenter, so if you want to discuss one or two more points, just let's do it quickly.
Okay, yeah. How about that third one? You know, like I said, we have that huge spreadsheet of literally hundreds of pieces of content that we have, and you know, some investors say, you know, if you have a plan that's detailed for 1 or 2 years out, then you're not realistic as a startup. You know, a startup changes its path every 2 months. You know, it pivots. You know, we've sort of like compromised on a 6-month content development plan, and even then, you know, it seems almost a little too far out, because you know, what if we have a plan and then we talk to a great content partner in an area we didn't think of at all, and that suddenly takes a bunch of our attention in a good way. You know, what do you think? What's your opinion on what's the appropriate horizon on which to show or create a detailed plan for something like that?
Well, my philosophy is that you need to have some directional idea about where you're going, right? If you're going to go in the direction of test preparation, then I would stick to test preparation and not do, you know, other things like, I don't like the kind of content strategy that you presented. I like more organized plans, more segmented plans. If you're going to do test preparation and if you're going to position this, at least in the first couple of years, first 5 years, you build a test preparation company is a very different company than somebody that's going to do corporate training, or somebody that is going to be do something, you know, completely different, because the channels are different, the way people buy, you know, people think about things are different, and the partners that you go for are very different. So you know, Princeton Review doesn't help you in teaching languages. Pimsleur helps you teaching languages. Rosetta Stone helps you in teaching languages. Princeton Review doesn't. So I think my general guidance would be to pick what kind of a business you want to build, and build your content development plan and your partnership plan, channel plan, everything around that. Right now, your business proposition is way too broad and kind of all over the place. And we have a term, if you hang on and listen to the methodology section of this session, you will hear me use the terminology spray and pray, and we just don't believe in spray and pray. Okay?
Okay, fair enough.
Right. So if you hang around a little bit, we're going to talk about methodology, and that might help you kind of pare this down to something that investors are going to resonate with. We have one other presenter, Hisham Jorio. Hisham, are you there?
Hi, yes, can you hear me?
Yes, I can hear you fine.
Hello.
Where are you joining from first?
I'm in Santa Clara.
Okay.
Santa Clara, California.
Perfect. So let's go.
I'm in. Okay, go ahead. So basically, SafarClick started in January 2008 out of Santa Clara, California. But mainly, the market that we target is the MENA region. So we have an office also in Casablanca, Morocco, and Dubai, UAE. So next slide, if possible. Next slide there. So basically what we did is we created a sourcing platform for online travel agencies. Mm-hmm. Mainly the first customers that we targeted is basically Expedia.com, Hotels.com, and TripAdvisor. So we were able to close our first customers after 6 months. After we did the first version of our platform, we went out and we started sourcing for the hotels and transportation companies in the MENA region.
Well, explain to me, what is the value proposition? What is it that what is in the platform?
Okay, so the platform basically, so in the MENA region, especially in third world countries, companies like Expedia or Priceline, they're having a hard time sourcing basically potential suppliers, which is hotels. So as for example, in the MENA region, there's over 35,000 hotels. And if you go back, if you check out, let's say, the offering of Expedia, you'll find less than 2,000 hotels in the whole MENA region. So the issue that they have, since they don't have most online travel agencies, they don't have operations in the MENA region, So they're having a hard time communicating to hotel managers. Most of them do not understand what online travel is, how they can get customers out of Expedia and Priceline, because they have to understand how to use something called an extranet, for example. An extranet is very simple for hotel manager in the US or Europe, but for someone, let's say in UAE or Morocco or Egypt, it sounds very, very hard to go and enter the information on daily basis.
Yep.
They don't understand what a channel manager is. So that is what we do for hotels. So basically we go and we tell them, we'll give you an exposure to all the online travel agencies all over the world. So we do all that work for them. And basically what we do is we share commission with the online travel agencies. For example, if Expedia sells a hotel booking, let's say, we get half of the commission that they get out of the hotel. So we launched the first platform so basically the first platform we launched after 6 months, and it's being used by Expedia today, it's being used by HotelBet. These are the first 2 customers we closed. Then we start dealing with GTA, which is a major online travel agency for businesses mainly. So today we sourced almost in the MENA region about 3,000 hotels. The idea is within 5 years we want to do sourcing to the whole 30,000 hotels if possible. So most of our spending is basically hiring people to go to the hotel in person and basically show them how to use the extranet.
Okay.
So which takes a lot of effort. Yes. So it's a B2B, mainly it's a B2B model where most of our business comes through the online travel agencies. Worldwide, there is almost 50 OTAs that we want to deal with. For example, in Europe, we have the Venier.com, Booking.com. In India, for example, there's MakeMyTrip.com. So these are the OTAs that we are targeting for the next couple of years. So once we set the processes right, we'll target all of the 50 OTAs and we'll give them access to the sourcing platform.
And what is the business model? Exactly how do you charge for this?
So this is the business. So once we give them access to this sourcing platform, so let's say you go to Expedia.com and you do Casablanca and you get 1,000 hotels. So they get some of those hotels, they get them to our sourcing platform.
Yeah, understood that.
And you end up doing a booking. Then we share the commission between us and Expedia, basically. So if the commission is 20%, we just get 10% and they get 10%.
Got it.
So
based on your current customer base, what is the revenue level of the company?
Last year we did almost $3 million, $2.9 million in revenue.
Okay.
Yeah.
All right.
Good news, we become cash flow positive by Q4 of last year.
Okay. What are your questions?
Okay. So the milestones we did is we raised funding, actually angel funding, in 2009. We were able to close major customers to validate the business, which is Expedia, GTA, and HotelBet. So if you go next slide, then we can see the questions that we have for you.
What is this?
For some reason, it's not going through.
Is that the one you want? Is that the slide you want?
No,
or?
there's the next one. So these are the milestones, basically. So the questions I have is, currently we're being approached by certain hedge funds for an investment, a hedge fund that invested in MakeMyTrip.com in India.
Mm-hmm.
So they're very familiar with this business. How does it work? So what is the value add of having of working with a VC or a hedge fund? Is there any difference between the two?
Yeah, VCs are specialized in building early stage businesses, and your business is still a small early stage business. $2.9 million is not a large business, right? It's a nice sized nice business, but it's not a very large business yet. So VCs tend to be good at that stage of the business. Hedge funds don't have any real experience in building that stage business. But I think you have a different issue that you need to think about is there enough TAM, total available market in your business model to justify a VC investment? So I'm not sure, because I haven't seen your TAM analysis. It's hard for me to say whether you do or don't, and whether this business is at all even viable for venture capital.
Okay, all right, that's a fair question. I think the TAM is it's almost for the MENA region. Let's say we sign up the whole 30,000, 35,000 hotels, and we offer it to 50 OTAs all over the world. The market easily can reach around $200–300 million a year. So we're targeting for this year, we're going to hit around 7.5 million. So the business is growing fairly quickly. The margin is pretty good, so we're almost cash flow positive. The question I have with the hedge fund is, these hedge funds, they have experience dealing with OTAs. They invested in MakeMyTrip.com, which is, I think, the largest online travel agency in India. They just took them public in the NASDAQ last year, January 2010. So I was just saying is, as I'm thinking, since they have experience in dealing with OTAs, they would understand this business model well. So that's why they approached us. But again, maybe you don't have as much.
Let's just put it this way: I'm not convinced, and I don't like the idea of hedge funds investing in startups.
Okay, that's good. That's good to know.
That's as blunt as I can.
Okay, that's fair enough. Fair. So the second question I have, so basically changing the model to achieve cash flow positive. So what I'm trying to say with that question is, does it make sense to go and grow the organizations in 2011 and hire as much as sales personnel to go to hotels and sign them up, and lose more, or again have losses for the next year or a year and a half, or just keep it as a cash flow positive and grow slowly? What makes more sense? What VCs like to hear?
VCs don't like slow growth businesses, but I'm not convinced that business is necessarily something VCs are going to be interested in. And VCs like fast growth businesses. So if you're asking what would VCs like, they don't like slow growth businesses.
Oh, they don't like slow growth business? Is that what you said?
They don't like slow growth businesses. The whole venture model is to get to, as a fast growth business. The whole venture capital model is designed to build substantially large companies in a 5 years to 7 year period.
What is
so if you're showing a relatively steady growth curve with profitability, that's not necessarily attractive for VCs. Having said that, I'm not still convinced that this is something VCs are going to be interested in. Second thing is, personally, I would not try to do a lot of external financing on a business that is growing naturally. I personally have a much bigger bias towards building sustainable business. And since you've already almost reached that position of being cash flow positive with a sustainable business model and good solid deals, I personally would grow it slowly.
Okay.
Without mucking with the business.
Very good. Thank you. Thank you very much. Thank you for your feedback.
Good luck.
Very good.
So let's actually do a bit of methodology, which some of you have asked certain questions, which will become clearer as I do the methodology section. Meanwhile, Ravi, is the poll ready? We have a poll on our Facebook page, 1M by1M. So all the companies that you listened to today are on it. So we strongly encourage you to go and vote for which one is your favorite company. And the guys who presented, drum up your support base while I do the methodology section, and then I'll take some questions from the public chat. So the methodology that I'm going to show you today is the Entrepreneur Journeys methodology, and it's basically what I'm going to refer to mostly has been documented in the Entrepreneur Journeys book series, By the way, if you're having difficulty seeing the slides, you do have the option of blowing at the top left corner of the slide portion. You can blow the slides up to full screen if you're having difficulty reading the slides. So one of the pieces that I should put in context is that a lot of the case studies I will be referring to as I go through the methodology are documented in the book series, Entrepreneur Journeys, the 4 volumes of Entrepreneur Journeys. And this is just like a 10-minute overview of our philosophy. We have about a 30 to 50-hour curriculum that supports all this methodology with video lectures and case studies in the 1 million by 1 million premium program, and I'll talk about that in a minute. But let me first give you the sneak preview of the methodology itself. So one of the underlying philosophies of the program is that there are many more 1 million, 5 million, 10 million, 20 million ideas than 500.
To turn off the music, press 1.
Bharati, can you please turn up the audio line that we're going to talk? You're getting interrupted by music. And you have to keep talking. So our philosophy is that it's very worthwhile to building similar business ideas and not worry so much about the TAM and trying to get to the very large businesses, the $500 million kind of businesses. If you have a $500 million or $1 billion business idea, that's great. But my point here is that those businesses are much, much slower to come by and a lot harder to come by. But in the meantime, there are many ways of becoming a successful entrepreneur, but by working on something that is, interesting and worthwhile and sustainable, something that you can build good revenue and profit out of, just like Jisham just showed us a business that is already profitable, has a good value proposition that customers are buying into, that's fine. Now, this methodology also is something that you can use to self-teach, or you can point others to it, other fellow entrepreneurs who are trying to get a handle of the basics of entrepreneurship, of all these decisions of whether to raise outside money or not. If you raise outside money, what are the different types of outside money that you need to raise and so forth? What are the methods, whether you raise by convertible debt, do you do revenue sharing? There are all sorts of decisions that you make in the process of navigating your entrepreneurial journey. And the methodology that I'm talking about addresses those, and most of the methodology is presented in the curriculum that we have in the 1 million by 1 million premium lounge. Now, the first volume of Entrepreneur Journey is the book. The goal is inspiration and demystification, and what we focus on is how to craft a business block by block. So you'll see a lot of entrepreneurs have shared their strategies of nuances of how they have put one foot before the other. We don't teach how to be lucky because we can't teach how to be lucky. But crafting a business is something we do try to teach, and we strongly encourage that you focus your energy on, especially in the early stages, we strongly recommend bootstrapping, which is why we are somewhat against valuation without revenue businesses, because that's a very dangerous route to take. So we want you to, as quickly as possible, we want you to get to customers, and we want customers to validate your value proposition, and not even investor validation. I actually don't personally believe in investor validation. I believe in customer validation. I have, been in Silicon Valley in this business for 16 years, and I've seen a lot of very, very well funded, like 40, 50, $60 million funding, venture capital, especially in the .com heydays, businesses without proper customer validation, basically crashing and burning because they didn't follow the basic, best practices, the principles, the diligence of building a startup step by step. And that's what we focus on in this program. We completely focus on that, more conservative, authentic way of putting one foot before the other. We are less speculative, more focused on fundamentals, may be the way to put it. Validation is very key in the entrepreneur journeys philosophy, in the 1 million by 1 million philosophy. We have a lot of experience working with investors around here and elsewhere. Investors do not fund ideas that are not validated. In today's market, there was a time in history when investors used to fund ideas that were not validated. That was during the dot-com heydays. But before and after and now, those ideas are not invested in, so you do need to get validation to get real traction. A couple of case studies on validation methodology. One of my favorites is Right Now, the story of Greg Gianforte and how he did validation. It's in Entrepreneur Journeys Volume 2. And there are several others in Volume 2. Murli Thirumali describes his methodology in Entrepreneur Journeys Volume 2, and Manoj Saxena also in Volume 2. The companies are Ocarina and Webify. So you'll see a lot of discussion on validation, and in the Premium Lounge, we have a whole module on validation, B2B validation, B2C validation, in-depth discussion on minimum viable products and everything. Positioning is Entrepreneur Journeys Volume 3, and as I referred earlier to my do not spray and pray philosophy, we believe much more in target shooting. We believe in tight segmentation, focused business building. We don't believe in spray and pray. Let's put a lot of things up against the wall and see which one sticks. That's just not how we believe in building businesses. There are principles on how you do segmentation, how you do positioning, how you do market analysis, and we recommend that you use those principles, apply those principles to get focused and get granular as opposed to broad and all over the place. A couple of case studies that I really like. PayCycle is one. It's a company that Intuit acquired recently. That's a very, very strong positioning case study. Define in the B2C world is also a very good case study. They've become one of the largest product search engines in recent times over the last few years. And the story that I showed you is they laid out a strategy of exactly how they were going to go to market. They have not deviated from that strategy over the last 4 years, and they have built a great company by just staying on course. But in general, in Entrepreneur Journeys Volume 3, that's the positioning volume, you have 16 case studies, all in one way or the other deal with the topic of positioning. And then we also recommend that you use the Clarify Your Story framework. It's the appendix of EJ3, but we also make it available for free in the public domain. Clarify Your Story is based on my 10 years of consulting, and it's the kinds of questions I have worked with customers in helping address that make a meaningful difference. And in my opinion, these are the kinds of questions that you need to answer. It's not always easy to answer those questions, but you have to start asking those questions, and over your evolution, you'll have to get those answers right to be able to build strong, sustainable companies. Innovation Need of the Hour is the 4th volume of Entrepreneur Journeys. There are a few major themes that I explored there. One is, with the innovation ecosystem is going through some troubles right now. There is a lack of financing. There's a problem with the financing ecosystem. So there's not a lot of money available to innovators these days. So you are going to need to basically apply creativity, apply alternative financing models, creative financing models to achieve your dream, basically, to bring your dream product to market or dream idea to market. And this is another aspect that I deal with a lot, is alternative financing and the ways in which we can mitigate the issues, the challenges that the venture capital industry is posing today. So today, the announcement that I talked about at the very beginning of the show, the partnership with Persistent Systems, of which Crowd Engineering, one of our 1 million by 1 million companies, is the first beneficiary. That is, the way I explain it is that it's an alternative financing model. So if you go and read the blog post on my blog today, sramanamitra.com, you will see I've explained how that model of financing, that model of partnership works, and why I encourage it, why it's important for innovators to think about. A few other useful case studies. Many of you are building web businesses these days. Web businesses are some of the most frequently attempted businesses out there by entrepreneurs. And my Web 3.0 framework, which I've discussed in Entrepreneur Journeys Volume 1, the Taking on Giants section, is very effective for building product strategy and market strategy. And it's a formula. Basically, I use the different generations of web technology to come up with this framework where you bring content, community, and commerce in context and apply verticalization and vertical search and personalization to your product strategy in that context, whatever vertical in which you're building your web product. That's my Web 3.0 framework. There's an extensive body of writing on this. Again, there's a module in the Premium Lounge on this, including lectures and case studies that would help you learn this better. Bootstrapping using services is, again, a practical way to build businesses without having to depend completely on external financing and going through, heartburns, basically, in bringing a product to market. And there are some great case studies. One is Bootstrapping to Billions, which is in Entrepreneur Journeys Volume 1, and Free to Innovate in Entrepreneur Journeys Volume 4. Cryptography Research is the company. I recommend that you read these two case studies if you're even contemplating bootstrapping using services. And for a large portion of our audience, I recommend this heavily, actually. So the books are all available on Amazon, Kindle, and in India, they're available from Flipkart.com. They are Entrepreneur Journeys Volume 1, Bootstrapping Weapon of Mass Reconstruction, Positioning, How to Test, Validate, and Bring Your Idea to Market, and Innovation Need of the Hour. And then there's a final book that's Vision India 2020. I know we have a large Indian readership and Indian audience in the program. Vision India 2020 is my notebook. I've been making notes over my career, first as a serial entrepreneur all through the 1990s decade, and then as a high-level consultant in Silicon Valley through the 2000 decade. I've been making notes about India and the business opportunities leveraging India. And I've basically published those notes, and it's written as business fiction, as if we are in 2020 and looking back on building these companies. And you have basically $45 billion business ideas, and feel free to steal any and all of them. It's a futuristic retrospective. It's a strategy manual. Whichever way you look at it, it's a book that is going to be helpful for those who are working with India or on India. SramanaMitra.com is one of the key resources where you'll find a lot of our content. That's where our blog resides, and that's where we have huge amount of case studies, thought leadership content, interviews with thought leaders, and so on and so forth, trends pieces. The strategy roundtables that you're part of today, we do these every week on a religious basis, and they always are scheduled for 8 a.m. Pacific time. And then the 1 million by 1 million private lounge, the premium program, is at 1m1m.sramanamitra.com, and we have a very large selection of case studies there, and very large selection of video lectures. And there's a variety of different services we provide through that. That includes channel partnerships. Again, the kind of deals that we announced today. We help you with investor relations, investor introductions. There's private coaching, the same kind of format, but in a private closed group, and a whole lot of other leveraged services that are connecting the dot oriented. I have a very large Rolodex, and basically I apply that Rolodex to the 1 million by 1 million entrepreneurs through this program. It costs $1,000 in annual membership to be part of the program, and then in some cases, if you're involving me in significant business development, channel partnership type of deals, there's additional revenue sharing types of models on top of that. So, but your basic unlimited access to the lounge is for $1,000 annual membership fee. That's pretty much it as far as content is concerned. We work with a lot of partners around the world who help us bring 1 million by 1 million, the mission and the content and this programming to different communities all over the world. And if there is a company or an organization or a nonprofit or professional organization, alumni association, whatever, in your community, please feel free to invite them to join us and become part of our partner network. And today we worked with Volusion, which is an e-commerce platform provider, to bring this roundtable together. And we want to thank Volusion for helping us organize this roundtable. And we work with a lot of vendors as well. Viview, for instance, is one of our sponsors and partners and they're the platform that we work on as far as these roundtables are concerned. We've worked with DimDim in the past. And these are all people who believe in the core theme of entrepreneurship. You know, we are all, at some level, we're trying to change the world. And if you read some of my writings on what my vision of capitalism 2.0 is, 1 million by 1 million is a program whose goal is to invent a new form of capitalism which is more democratic, more distributed, where many more entrepreneurs create a lot more wealth, as opposed to the fortune at the top of the pyramid scenario that we have created through the first revision of capitalism so far. So that's pretty much all I have to say. We have about 4 roundtables in February, actually exactly four roundtables in February, February 3rd, February 10th, February 17th, and February 24th. All of them are at 8 a.m. Pacific time. That's pretty much all, I think, as far as I'm concerned. I am going to open up my public chat and try to take a couple of questions. But we are already at 9:31, so we probably will not have time for a lot more questions. So, so Mukul is saying in the public chat, persistent systems is a great addition to 1 million, 1 million. Thank you. That is absolutely true. We are delighted, and we will, you know, I have a good 100 to 200 CEOs in my Rolodex, if not more, who have built extensive channels, and I'd like to bring some of the, where appropriate, I would like to bring our 1 million by 1 million entrepreneurs into that channel base so that we can go to market efficiently and in a non-dilutive way, without burning through lots of cash and losing control of your companies. Any other question? I'm just going to take one more question and then we need to end the session because we've already gone for an hour and a half. Well, I don't see any questions, so definitely access to a TAM template. Dan, again, that's part of, there's a whole section on TAM and positioning in the premium lounge with lots of lectures, case studies, everything. So my recommendation is just go to the premium lounge and get yourself oriented. Very good. Glad to hear that, Dan. So, by the way, Irina, whom I see commenting in the group chat, is somebody whom you can arrange to talk to if you have specific questions about the premium program and you want to talk to someone live. You can definitely talk to me, but you know, I'm quite bombarded right now. So one of the 1 million by 1 million ambassadors who is really helping, you know, orient some of our early members is Irina, and you're very welcome to call her and arrange to talk to her by phone, and she will be happy to assist you. And if she thinks that I need to be brought into that conversation, she will bring me in. So I am very accessible, but at the same time, as you can tell, we've taken on something very big, and we need to leverage the team, and I would like you to all kind of help us spread the word, because it is a broad agenda. It is we will be successful in achieving the 1 million by 1 million mission if all of you make a concerted effort to use your networks and your resources to bring more people in, to spread the word around, and also to join the program and leverage its resources and become successful entrepreneurs. What I'm looking for right now is $100 million entrepreneurs who go through the program and become $1 million entrepreneurs. So I want 100 of you to become successful case studies of 1 million by 1 million. So I need you to join the program and go through the methodology, follow the methodology. I will work with you shoulder to shoulder so that you become our poster boys and poster girls in promoting the program, in improving our methodology, improving the concept, and then we'll go to 1 million. We have to go to 100 first before we can go to 1 million. Okay, that's all for today, and I will look forward to seeing you all next week. And thank you to the ambassadors who are in the room. And let's keep pushing. Goodbye, everybody.